Hey everyone, welcome back to Corporate Decoder, the place where we sift through mountains of corporate jargon so you don't have to. Today we're diving into Pool Corporation's latest 10K filing. You know, those yearly reports that companies are legally required to make. It's like their homework assignment, and we're here to check their work. Is Pool Corp sinking, swimming, or just doggy paddling? Let's find out. Pool Corporation, or Pool as they're known on the stock market, is the big fish in the, pool supply business. They're the world's largest wholesale distributor of pretty much everything you need for a swimming pool or even an irrigation system or your backyard patio. Think pumps, filters, chemicals, tiles, even stone for that fancy outdoor kitchen you've been dreaming about. They operate across North America, Europe, and Australia, so they're not just your neighborhood pool store supplier. They sell to the people who sell to you: pool builders, service companies, even retail stores. The report covers the fiscal year ending December 31, 2024. This filing gives us a snapshot of the company's performance, strategies, and potential risks. It's our chance to see how they're handling the waves of the current economy. So, how does a pool supply business actually make money? Pool Corp believes their size gives them an edge. They buy products in bulk from tons of manufacturers, then distribute them efficiently to their customers, often at prices smaller businesses couldn't get on their own. Think of them as the Costco for pool supplies. A lot of their business depends on a big installed base of swimming pools, about 11 million bodies of water in the United States alone. The more pools there are, the more maintenance and repairs are needed. And the more people want fancy backyard upgrades like lighting and patios, the more Pool Corp sells. Several trends work in their favor. People are moving to warmer states where pools are more popular. Homeowners are spending more on those fancy outdoor living spaces. Plus, there's a growing demand for energy-efficient and automated pool equipment. It seems like everyone wants a smart pool these days. The pool business breaks down into three main areas: maintenance and minor repairs, remodels and renovations, and new pool construction. The bread and butter is maintenance. That's the chemicals, supplies, and basic repairs that keep pools running year after year. This part of the business is fairly steady, even when the economy isn't doing great. Remodels or upgrades are a bit more discretionary. People do these when they have extra cash and feel confident about the future. New pool construction is the most sensitive to the economy. When times are tough, people might put off that new pool and spend on something else. Here's an interesting fact. The number of in-ground swimming pools has steadily increased over the past decade. 2024 numbers are estimates, but over 5.4 million in-ground pools in the US is not bad. This growing pool base is great for Pool Corporation because it means more long-term maintenance business. Of course, like any business tied to home improvement, Pool Corp is sensitive to economic conditions, especially interest rates and how easy it is for people to borrow money. High interest rates can put a damper on new pool construction and those bigger renovation projects. It wasn't all sunshine and chlorine in 2024. Existing home sales were down thanks to high interest rates, but new home construction was up. That's potentially good news for the future, as those new homes eventually will need pools and irrigation systems. Pool Corp plans to keep growing. This means opening new sales centers, making strategic acquisitions to further penetrate existing markets and expand into new geographic markets and new product categories. This is how they plan to grab a bigger share of the existing market. Pool Corp faces intense competition from lots of smaller, local distributors and even some big retailers who buy directly from manufacturers. The key to winning in this business is offering a wide range of products, providing great customer service, having convenient locations, and keeping prices competitive. These days, every company has to worry about cybersecurity, and Pool Corp is no different. They rely heavily on technology for everything from processing transactions to managing inventory. Any kind of cyber attack could seriously disrupt their operations, lead to data breaches, or damage their reputation. Pool Corp is investing in technology to protect their systems, including things like employee training, third-party assessments, and a third-party risk management program. They're trying to stay ahead of increasingly sophisticated cyber threats, but there are no guarantees. The company's board of directors and a special committee keep a close eye on cybersecurity risks and response plans. The Chief Information Officer, or CIO, is in charge of the day-to-day management of these risks. Pool Corp owns some of its sales centers and warehouses, but mostly leases them. They try to put these locations close to where their customers are, usually in industrial or commercial areas. As of December 31, 2024, Pool Corp owns 17 sales center facilities. Let's switch gears and dive into the financial performance numbers of Pool Corporation. Net sales decreased 4% to $5.3 billion in 2024. To give you a sense of scale, that's like selling about 145,000 average-priced cars in a year. That number is down from the $5.5 billion they made in 2023. Maintenance sales remained pretty consistent, but sales of new construction and remodel products took a hit. Inflation, meaning higher prices, actually helped their sales a bit, but not as much as it did the previous year. Operating expenses, meaning the costs of running the business, increased 5% to $958.1 million. That's mainly because they're investing in new technology and expanding their network. They also took a hit from the inflationary rent, wage, and insurance increases. Net income, which is profit after all expenses, decreased 17% to $434.3 million. That boils down to $11.30 earnings per share, which is down compared to last year. So while Pool Corp is still profitable, they didn't make as much money as they did in 2023. Pool Corp is also sitting on a sizable debt of $950.4 million. While this number decreased from last year, the debt figure might be something to keep an eye on. Debt is basically the corporate version of a credit card, and it can create risks for a company's operation. Looking ahead, Pool Corp expects sales to be flat to slightly up in 2025. They're banking on steady demand for maintenance products and hope that construction and renovation activity will pick up. Pool Corp faces a wide range of regulations, mostly about the handling, transportation, storage, and sale of chemicals and fertilizers, which is a big part of their business. Regulations by the Environmental Protection Agency, the Consumer Product Safety Commission, the Department of Transportation, the Occupational Safety and Health Administration, the National Fire Protection Agency, and the International Maritime Organization are also applicable, and compliance is a must. As for other risks that they face, keep in mind that bad weather can sink their sales. Also, since they buy from a relatively small number of suppliers, losing one of those key suppliers could be a major problem. Cybersecurity is another worry. As they handle a lot of sensitive data, a data breach could seriously damage their reputation and finances. The company is led by its chief executive officer and the board of directors who oversee risk management programs and management. These programs cover financial risks, cybersecurity risks, regulatory risks, and operational risks. Finally, it's worth noting that their external auditor, Ernst & Young, gave a thumbs up on their financial statements and internal controls. That provides some reassurance that everything is being done by the book. So what's the takeaway here? Pool Corp is a well-established company with a dominant position in a relatively stable industry. The company's strategies to expand their footprint, invest in technology, and manage costs seem reasonable. While a decrease in new construction spending may be a point of concern, the company's focus on long-term growth and shareholder returns suggests a positive outlook. However, potential investors should carefully analyze the risks and opportunities detailed in the report in order to assess the company's potential. I would keep an eye on their debt levels and how they manage supply chain risks. Thanks for watching. If you enjoyed, please subscribe, like, and comment.